Welcome back for another report on the gold market. Gold's price performed a breakout in the past days and managed to rise at new monthly high prices. Even though gold's activity on Monday and Tuesday's early European session had shown signs of more controlled volume, this report will include events that have the potential of moving the gold market in the next days, as well as fundamentals that currently relate to the yellow metals price action. Physical demand for gold information will also be provided, while the technical analysis at the end will provide traders a complete market analysis. More updates on the US economy's performance may have motivated traders in the past and current week to take action. Specifically, gold's biggest upward daily movement was performed on Thursday the 6th, when the weekly US initial jobless claims figure was released. According to the reading, the number of individuals who filed for unemployment insurance for the first time during the past week was lower than the previous week and lower than the expected figure, reaching 489,000 in total. Even though the figure should have been considered positive for the USD and negative for gold, exactly the opposite took place. The greenback was on the back foot while gold was on the rise. On the opening of the US session on Thursday, which was 30 minutes after the release, gold was already up $20 in value. The precious metal stabilized for the next 24 hours when the US employment market report for April was about to be released. The figure provided mixed signals as the unemployment rate and non-farm payrolls number failed to satisfy the market expectations of improved figures, while the average earning numbers were better than expected. The result was gold's price undertook another boost higher, very similar to the pre-mentioned, again gaining approximately $20. In the next days, gold traders will most probably turn their attention to the release of the US CPI rates for April, to be released on the 12th of May in the US session. Gold's price has traditionally been correlated to inflation data, as the yellow metal can be used as a measure to counter higher prices. In addition, on the 13th of May, we get the weekly US initial jobless claims figure. Finally, the 14th of May is a rather interesting day for gold traders, as we expect the US retail sales figure and the industrial production figure both for April, while the preliminary University of Michigan sentiment figure for May will be delivered. Finally, on Tuesday, the 18th of May, we get the US housing starts figure for April. As a final note, we would like to emphasize that physical demand for gold has seen a dramatic increase in the past 3 months of 2021. According to Refinitiv Econ, the demand has been supported by a rise in jewelry demand and retail investment for coins and bars. Yet ETF gold holdings saw a drastic decrease as a result of improved economic circumstances. Moving now to the technical analysis and gold's daily chart. As noted, gold broke out of the range it was trading within since mid-April between the S2 1793 support level and the S3 1752 support barrier. We have also added a level higher as our S1 1813 support level due to some activity nearby that line back in February. If the previous metal is to move even higher, the R1 1854 resistance level could become a first target for the bulls. If the bullish trend line is to be extended further, then the R2 1877 level can be the next stop, while even higher the R3 1900 resistance level is also in the picture as our highest line for the bulls. Please note both the R2 and the R3 lines are levels last seen back in January 2021. On a weekly basis, the previous week was the strongest in terms of buying orders for a long time. Thus, this could be a sign of excessive buying power used by traders globally at the moment. Gold has also managed to remain and extend its upward trend line in May, which has been formed since the start of April. At the moment, the RSI indicator has reached the reading of 70, making the statement that buying orders are still in excess. That should sum it up. We hope that you found the report useful. From all of us here at IronFX, best wishes for solid trading.